Legends. Welcome to the stream. Sorry, let me just get the screen active. All right. Hope you're well wherever you are. It is Friday the 6th of... No, it's not. It's Saturday the 6th here in Australia. So it's probably Friday night wherever you are. So welcome to the Daily Buyer Show, where we dig all charts as they relate to crypto. What I'm going to do in this show, and what I'm going to try to do going forward, because I'm here every day at the Bitcoin close, I'm going to try and aim to get these done in about 30 minutes, right? Because a lot of the time, I guess we're going over similar things. So I'm going to focus now more on going through just the most important charts of the moment, of the day, because I plan to be here every day, right? So let's get cracking straight into it. And the first thing I want to open up with today is just a quick refresher. I put this post out on X, and this was from yesterday. Okay, so I just want to quickly play this. It's a bit of a holding pattern, I call it, right? Where heading into next week, being the key volatility driver, it's a bit of a sit on my hands kind of moment. Because my macro bias suggests that I should be less hesitant to jump into shorts. Okay, but considering we've swept the highs and we've swept the lows, I don't really have decisive action here. So this makes me think, okay, just sit on your hands till next week and let's see how it all unfolds. Because typically going into the FOMC, we'll get a lot more volatility. And after the FOMC, once Jay Powell starts his press conference, that's often where we'll get a lot of the volatility. You get the point. So that's what I posted yesterday. And I said we're sitting on our hands because we're in the volatility window. And if you've been keeping up with the streams, the theme has been coming into December that we've got a heavy macro calendar, and we're at a phase of the cycle where Bitcoin is structurally bearish, and we're in a potential transition into a bear market for Bitcoin. Hence, some of these macro catalysts are going to drive a lot of volatility, because in the shorter term, we may have this counter trend rally, but it's only going to be, I should say the size and the length of this counter trend rally will be driven by some key macro liquidity catalysts. Okay, so we're still in that volatility window, especially heading into FOMC next week. And it's likely that as the market anticipates, well, at this stage, there's still an 87% probability of a cut, right? So that means the front running that's happening right now is the market trying to kind of position into that. But it's very volatile, right? As data changes, as sentiment changes, this trajectory has been jumping all over the place a little bit. But typically what we're going to see is, as we head into the FOMC next week, we'll get more volatility. But the most volatility will come when Jay Powell speaks, okay? Because that's where we'll be gauging his tone. We'll be trying to understand what the future liquidity picture looks like. Is he going to be more dovish? Is he going to start becoming looser? That's basically what the market's trying to anticipate. Now, again, if I just refer back to what I spoke about yesterday, is there's a lot of speculation around liquidity, okay? And to the extent of how I speculate are some of the key catalysts. I make note of the key catalysts, which I'll just come back to my Substack again, right? Which QT ending, TGA shift from refill to spend, and the rate cut in December. But what matters most to me is the data and the charts, right? Because speculation is just speculation. You can't, well, sure, you can trade speculation, but where I find my success is trading when the data confirms or rejects speculations and positioning accordingly, right? Hence, when we look at first and foremost, the speculation of QT ending. If you've been around X, that's been one of the big narratives at the moment, that QT is ending. So, crypto to the moon, etc. Now, I've been talking about the fact that QT ending doesn't mean QE is starting, right? QE starting is when the Fed expands its balance sheet. Okay, QT ending just means that they'll potentially stop reducing their balance sheet. Okay, now I saw a post from Kabasi Letter saying QT has officially ended, and I said yesterday we'll be watching the balance sheet, but ultimately we'll be watching my net liquidity indicator, which aggregates the balance sheet, the TGA account, the reverse repo market, to give us the clear signal on liquidity. Because if QT ends, right, and it doesn't do anything meaningful in the balance sheet, where at the very least it doesn't at least flatten the balance sheet, if it keeps draining for whatever reason because they're doing some other tightening, right, the risk markets are going to tumble even further. So QT ending, in my opinion, doesn't mean anything unless we see in the balance sheet the flattening, or if you want to be bullish, you need to see the balance sheet expanding, because that's the historical recipe for parabolas and for price discovery and for bull markets. It's the expansion of the balance sheet, which is money printing. Okay, now, in fact, overnight, we've got new Fed data, and let me just quickly come back to the catalysts. The main two catalysts being QT ending in December and the TGA shift from refill to spend, so the government to start spending money. Well, if we look at net liquidity, what happened? Net liquidity has turned down, right? See it here? I know, I'll zoom in so you can see it. Net liquidity turned down with the new data release. And if we now look under the hood, right, I'll go directly to the Fed. And this is, first we'll go to the Fed's balance sheet, and I'll zoom right in here. It's still going down, right? So this shows that despite the QT ending narrative, at the very end, so this is the last print from November 26th. So sure, it's not December yet, but the last print shows that it's still going down. Now, the best case for the bulls is that because that's the last print from November, December, the next one, updated December, but it is from November, right? So the best case for the bulls now is on the next release, which is another week away, we start to see a flattening or an increase. But in fact, it went down again, right? That's the main thing we got to notice, which is a tightening of liquidity. And when we come to the TGA refilled again slightly in the last week. Hence that uptick in net liquidity. So these aren't the kind of things that boost or juice markets, right? Because we're looking for TGA to come down, not go up, okay? And we're looking for the balance sheet to at the very least, flatten, okay? Hence, net liquidity down. And Bitcoin being the, call it the closest and fastest signal on global liquidity, we saw it in Bitcoin's price too, right? Overnight. Well, I should say overnight, because it's overnight for me in Australia, right? Legend, there he is, Richard. Thanks for joining, Legend. Hope you're well. I know you've probably been here for a little bit, but I just haven't had a peek over at the comments. Thanks for joining, Ledge. So, right, we saw it in Bitcoin. Okay, so the key thing I want to come back to is that message I shared earlier from my ex and from yesterday's stream. We're in the volatility window. Okay, so that means going into next week, all of this price action is the market acting on speculation, right? Not acting on, in my opinion, not acting on the directional, we're not going to see the true directional move until after all this speculation and we start getting more data, we get the rate cut confirmed, we hear what Jay Powell has to say, and we start seeing the data in either direction, going bullish or bearish, so that we can catch the next major directional move. If I quickly come back to our dashboard here, where we're looking at Bitcoin over the NDX, over the DEXI, over net liquidity, okay? Net liquidity slightly down. Now, we won't get another clear read on the data for another week, but we're going into FOMC next week. So for me, still sitting on my hands. If we do a quick scan of the charts, right, we go around the grounds. I'm not going to dig into every chart because, like I mentioned at the start, I'm going to try and keep these a little bit more short and sweet. But what the main chart I wanted to just quickly dig into is looking at the DEXI, how the weekly closed, right? And it looks like we've now had 2 solid weeks of pullback, okay? And we're coming into this weekly structure level, okay? So the most basic signal or most obvious signal with rate cuts coming down, it should force a little bit of further weakness in the DEXI, but that's what will be on watch next week. Okay, we'll be watching the DEXI closer because, like I explained in more detail on yesterday's stream, the DEXI, in my opinion, the DEXI from here to here is potentially supportive of the counter trend rally. From here down, we've got to analyze whether it's a recession concern, DEXI losing strength, or if it's actually a risk bid. Okay, and go to my stream yesterday if you want to understand what I mean by that. Okay, and then from here onwards, okay, that's most likely gonna cut short any type of bullish price action that we have in crypto and even across the other major markets. If we're trending up, that's the historical cyclical end to the bull market and potentially transition to a deeper bear market. Okay, so that's what's going to be on watch in the DEXI next week. Straight into the indices because I want to see how they closed for the week. All right, so pretty bullish, right? We had objectively, we had a nice response down here into the weekly bands, and now we've had a bullish close week on week. Okay, now we are coming into our key zone now. Remember, we've been discussing that when the structure's tested like this with a bit more momentum that flips bands, if it is a bigger distribution, we need to be observing price action back at these highs, okay? Because when these distributions play out, they might do something like this where they come give us the signal that they want to go lower, but then you get, you know, a lot of the distribution that potentially happens before you get the major trend shift. Hence, we've got to be analyzing price back at the highs, right, with our other signals and triggers. So overall, the weekly for the Dow still looks fine and intact. We saw some momentum being lost coming into the end of the week on the S&P. Okay, but overall still closed bullish. But on watch, the NDX, right, bullish. Okay, closed bullish, but same story. They're all telling the same story. We still have to watch what happens at the highs, right? Obviously, the most bullish case over the coming 2 weeks is that the FOMC happens as planned, get the rate cut, you get a dovish Powell, okay, which potentially stimulates more risk appetite in market participants. And at the same time, you start getting a strong breakout, okay, across the indices above the high. None of this sweeping and then doing this sort of thing, because that's more telling us about potential distribution. We get a stronger move out here, and that again would support the counter trend rally thesis, okay, playing out. So those will be on watch. Now the Russell is a bigger signal that I'm tracking at the moment. Okay, and again, even from the Russell's perspective, it was bullish. But just quickly, why I'm tracking the Russell. If you come back to, I've created this other dashboard now as well, because I've done some historical analysis across risk markets and specifically the SPX and the NDX, because what you'll find is the NDX and the SPX as a market will top last. It's the last signal to track in terms of our risk markets. And when you look at Bitcoin, the Russell and Nvidia, it gives you a good gauge and spectrum and potentially early signal on the tops that are coming in on the NDX and the SPX. And I back tested this all the way back to around 1998, right? And what you'll typically find is Bitcoin's the cleanest and fastest signal on global liquidity. The RTY is slower than Bitcoin, but it often will top sooner than the rest of the bigger markets because of the way that capital exits its more riskier plays. And then you've got Nvidia as our Mag 7 biggest, I believe it's still the biggest market cap, and it's our Mag 7 leader, and it's our gauge on the current AI/tech sentiment that drives the SPX and the NDX. So what I found by tracking all these three things, when we start to see the bearish divergences form, often Bitcoin is the earliest signal, but then we'll start to see it in the RTY and Nvidia, that those three combined are a very high probability early indicator of coming weakness in the overall SPX and NDX, which tells us that if the SPX and NDX lag these things and they're already giving the bearish divergences, that we're in a potentially heading to broader market weakness and a bigger correction across global markets. So hence I'm tracking these things because Bitcoin's already giving us the early signal. Okay, next we're looking at Nvidia and RTY, and let's just have a quick look at Nvidia. And what I've been noticing, again, if you've been with me over the previous streams, one of the main signals I called out is Nvidia pretty consistently tops earlier than the SPX and gives a bearish divergence. Okay, that has been a good signal. You know, you see it here. SPX charges new highs and Nvidia flat, tops earlier here while the SPX is still charging higher. Right, especially into the major tops. See here back in 2021. Okay, so coming back to Nvidia, we are starting to see early signals, not confirmed yet, but we are starting to see a little bit of divergence happening. Okay, this isn't a confirmed signal yet, but you'll see where the SPX, for example, even yesterday closed up 0.19%, and Nvidia again closed down 0.5%. All right, so this is just on watch, because as the SPX, if it continues higher, right, like this, Nvidia doesn't make a new high, then historically that has been a big signal on the SPX just lagging and is potentially going to turn over in line. So when we track all of these together, you can see how we get a nice clear picture across all of the things that I track, from crypto, from external liquidity through our net liquidity to the risk markets combined across markets to gauge global sentiment, down into the individual charts themselves, right? And they all start to paint this picture for us. So hence, those are the main charts. I'm not going to go through any other of the macro charts because we'll get straight into Bitcoin and crypto. But that's what's on watch for us next week. We're going to keep watching the indices. We're going to keep watching the potential Nvidia SPX divergence if it continues, and the DEXY as well, along with FOMC next week and key liquidity charts at the moment being net liquidity. Bitcoin. I hope you guys didn't get chopped overnight. right? Because we've been talking about this, and I said on yesterday's stream, we're in the volatility window, right? Last week was an inside bar, which showed some type of compression, okay, some type of range. Now, the current week's price action is an outside bar. This is not a decisive candle. This doesn't tell us if buyers or sellers are taking control of the market. And given the context and the volatility driver for the month, likely to be FOMC next week, I'm sitting on my hands, right? I want to see next week, I want to see all of these macro events land, okay? So we start seeing the data, and I want to see how the market digests it. And if we're getting, so if we close currently as a bearish outside bar, so when I say bearish, the candle's bearish, but the candle's also an outside bar, then what I want to be observing next week in alignment with the macro events is, how does the market digest it? Do we get a sweep down into these lows? And ideally, the major setup I'm most interested in to go long on is if we get a sweep of November lows and failure to break down, okay? Or even if we end up coming back, it be some type of capitulation sweep, right? That comes into these lows here, but recovers November lows, right? And then there's a failure to break down further beyond November lows. That to me would say that we're setting up for that bigger counter trend rally. And that's the ideal signal, right? Because if December ends up closing as a sweep of November lows and starts building some bullish structure underneath, then we are getting more higher time frame signals suggesting that at the very least there could be a bigger counter trend rally, or potentially the early formation of a structure shift. Okay, so hence that's what I'm watching at the moment. Like for me, it's still sit on your hands. Let's let the macro events land, and I'm watching interaction at these lows. Now on the flip side, if we're closing the week somewhere here, next week the catalysts, the FOMC comes in, maybe power's a bit hawkish, potentially net liquidity, we're not seeing the liquidity flowing through, and at the same time we're struggling to push into these highs, and we end up sweeping here into this weekly fair value gap. That's the kind of short setup that I'd be looking for, and that's the kind of momentum I'd be looking to short to potentially create new lows, or at least back into here. But in my opinion, based on the macro catalysts we're facing this month, I think most of December could be choppy as it kind of paves the way for Q1, right? And we're coming into thinner liquidity as we go into holiday season, right? So that's my current take on Bitcoin. So right now, still sitting on my hands, observing. Next week will still be more of an observation week, where I'll still be watching price action closely to see if one side of the market is taking more control, right? And obviously I'm here daily, so if you guys are with me, we'll be calling it together as I see it, and aligning with the best moves that we can. And it's really going to be after FOMC that right now, based on what I'm seeing, that I'm going to be the most eager to start participating in markets again. Okay. Now, if you're wondering how I'm going to participate in markets, I'm actually not going to break that down right now because I'm trying to keep these streams shorter. But just look at my last stream yesterday. I believe I did break it down either in yesterday's stream or the day prior. Okay. Or just jump on my Substack. I do my weekly market update on Substack, and it goes out for free, and it gives you my full position in terms of my bias, all the charts that I'm looking out for, everything that I'm tracking, along with Bitcoin structure, and I even lay out the most macro bigger trades that I'm kind of eyeing up and watching. Okay, so positioning, you can see here the macro continuation short, you can see my bias here, what would make me change my bias. It's all here in my Substack, right? I'm trying to get into a bit of a rhythm. I'm pretty new with this streaming thing and doing all this content. I usually just trade in silence on my own, invest and trade, but I'm trying to get into a bit of a rhythm here, and I'm thinking if my Substack covers it all and I'm here on these streams daily with you guys, each stream we can keep it a bit shorter, sharper, and I guess more on the pulse with current actions and charts rather than digging through everything in every stream. But I'm always open to feedback from you guys, so please leave me comments or follow me on X and DM me any type of feedback. If you like me to just jump on, do the longer streams where we go through everything. But yeah, appreciate it. Thanks, Rich. It's a bit of a work in progress. I'm kind of getting a bit more used to doing the whole camera thing. Let's quickly take a look around the grounds on crypto, right? Spend the next couple of minutes. This is Richard and my favorite chart right now, because stablecoin dominance sets the trajectory for crypto right now. We're at this key level. Again, dig through my Substack to get the full read on this and what it means. But basically, in a nutshell, this way means deep bear market, and alts and crypto will go much lower, okay? Alts and Bitcoin will go much lower. Here is our fun zone, where when we're heading down, okay, this means liquidity is deploying into crypto, and this is our fun zone, but we got to start getting more cautious to be risk off again down into these lower parts, okay? And we'll be observing this as it develops to help identify if we're just counter trend rallying or if it's turning into something else. And we'll be looking at these historical signals that we follow. These TT bands, we'll be monitoring the bands. These are free bands that I give away. Just DM me on X, okay? But we'll be monitoring if the bands continue to stay green like they did during this last counter trend rally, and we don't fail we don't create new structure weekly down below to suggest it's anything more than a counter trend rally if we get it. But we'll be monitoring this signal closely. Now let's take a quick look at, because ETH is the main setup that I posted in Substack. Okay, so a lot of the ETH setup is the thesis I've built around that setup is hinging on ETH to BTC and this historical pattern that it's following, where when it eventually does flip the bands and create its breakout, this is normal for us to come right back into it, retest it, okay? But we're just monitoring, as long as these bands stay green, if we get the counter trend rally, I believe ETH will outperform, and we're just looking at a move from here to here, okay? We're not having unrealistic expectations where we're thinking ETH is going right back up here, given the context of the market currently. If we get the counter trend rally, this is the kind of move that we're looking for, okay? Now, in the ETH chart, fumbling over saying that, in the ETH chart itself, let's quickly have a look at the price action. Very similar to Bitcoin, right? Where we've got the outside bar, but I would argue ETH looks slightly more bullish because we've still got the weekly structure intact, okay? And the candle itself still bullish. There's no sell side fair value gaps indicating strong sell side order flow like there is on Bitcoin. And the weekly bands are only just starting to cross, okay? Which could indicate a bigger ranging environment. Now, to me, it's the same setup as Bitcoin, where I'm not really doing much except for sitting on my hands to watch how this resolves. And again, as we go into FOMC next week, the last thing I'll say on ETH is I did post the ideal highest probability counter trend setup for me on ETH, which is down here, okay, which mirrors the Bitcoin setup. So the highest probability setup for me is a sweep of November lows for ETH. Okay, so if we come down here, right, sweep November lows, okay, and reclaim, which sets up January for a move at least somewhere into these highs, okay, back into 4K. And depending on the scale and the gravity of the counter trend rally, I think ETH could potentially still hit some major highs, but we'll assess it as we go, and we got to see how the liquidity picture unfolds. But this is the kind of setup I'm looking for, because even on the quarterly, ETH is currently an inside bar, right? If ETH had swept these highs in this quarter, I'd be more concerned that it's coming back down to at least these lows and major levels. But because it hasn't, it still suggests that, to me, we could be setting up for, if the counter trend rally happens, we could still be setting up for a more decent move and outperformance to Bitcoin, especially. Legends, I'm going to call it there for today's stream, roughly 30 minutes or just slightly longer. If you got something out of this, please follow me, give us a like, subscribe. I'm on X, where I'm pretty active. DMs are open if you want to chat, or if you want to just talk charts or anything like that. Yeah, hope to see you guys soon. I'm here every day at the Bitcoin close. Oh, look at that, 7 viewers. That's awesome. My record previously was like 4. That's so cool. So yeah, thanks guys, and I'll catch you on the next one. Have a great weekend. Same to you, Rich. Have an awesome weekend, legend. Take care.